Ardmore Shipping ASC. This is another oil tanker video. We're going to take a look at Ardmore. So, I mean, they have an okay balance sheet. Their cash is slightly behind their debts, but it's not terrible. And they didn't flatline or anything coming into this thing. They've been kind of wavering around 6 or 7. They did hit a low near 4 before, and this looks like an all-time low for them at a bit under 4. And this is a product tanker fleet. If I counted correctly, they have 23 tankers, and they're all Japanese or Korean built tankers, international, and they're all flying Marshall Islands flags. It looks like a pretty standard mid-sized kind of product fleet. And all their tankers are either product or product/chemical tankers. So the whole fleet, this is a direct target of product tankers. If you're looking for product tanker ideas. And where does this thing start? In here. Interesting. Okay. So we get a 1, 2, 3 down on the S&P, and we get a 1, 2, 3, 4, 5 up on the S&P, and the S&P is deeper. It went down farther than this thing did. The S&P did more like a 1, 2, 3, or an ABC down and up. So these guys were resistant to the bottom, and they pulled down, and they got an okay first bounce, and then the second bounce on the back half of the bull trap was just crazy. They went from 4 to 8 just on that one little leg, and overall they went, yeah, around 4 to around 8. They did more than a 2x from peak to peak. They did more than 2x. This is one of the huge blow up stocks, but this is not one of the crude specific oil tankers. And you see, like, the crude specific tankers in the beginning of the crash were already going up, and their charts kind of look like this. But with these product tankers, you get it coming down with the crash and then kind of turning and then picking up later here. So this is not just random oil tanker hype. This is because the product tankers have started switching from transporting refined oil to just storing crude because of the crude oil oversupply in the contango. And this is why you see the product tankers just shooting up recently and not from the beginning, because in the beginning they were storing all the extra crude on the crude fleets, and then the crude fleets filled all up, and then the product tankers started storing crude, and now they're getting this huge boost. And that is what is interesting right now, is these product tankers, but not this week, because ASC Ardmore Shipping is coming down, and so are all the tankers. We're getting turnover in the stock market now, which looks like it's going to make a wave down, and this is going to pull all the tankers down with it. Even the ones that have been long the whole time they're going to move down. These ones are going to move down, and we're looking for like a dead cat area, or the next kind of bull trap, or the next 5 wave kind of across. And the majority of the gains in the oil tankers are just going to be on these specific up moves, and there's going to be a down move now. And this is not investment advice, just what my cyclical model is projecting, as we have a 3 to 4 month credit contraction cycle, where you go down, bounce, kind of general credit cycle. And right now it looks like we have started going down, and the oil tankers kind of hyped a little bit. Like, they probably shouldn't have gone quite as high as they did, some of them, and they came back down into the trading area, and they're turning over now. And people are saying the earnings reports and this and that, but the earnings reports are all good. I mean, especially for these tankers. Now they're getting these crazy rental rates on the product tankers just to store oil and just sit there and just sit in line at a port for a month or two. That's what all the tankers are doing. They're just lined up in California or around Texas or China, Hong Kong, Singapore. They're just tankers, just full of oil, just sitting there. And they're not unloading them right now because the oil prices are too low. They're going to wait a month or 2 months till the prices come up. Then they can unload, and they have to wait in line to unload, and then they can go fill up with more oil. And by that point, the crude storage problem should be less of an issue. But I think we can refill all the tankers again for the next month and a half. It's going to be really short on storage. So these tanker companies look really, really good in the short term, and then they probably look good for more like 3 years, as they're going to have full employment and high rates, and so the rates will come down, but they're still gonna be fully employed and looking good, while a bunch of other companies don't look so hot. So these tankers are really interesting, and this is what I'm looking at this week is these product tankers because the crude specific fleets. It's like Nordic American Tankers, like TK, like TNK, and DHT, the double hull tankers, EuroNav, EURN. Those ones are all crude specific fleets that have done really well through the whole crash. But these product tankers have had a mix of results. Like some pulled down pretty far, some a little bit. There's like Tsakos, there's Ardmore, Scorpio, like STNG is Scorpio, and Ardmore here is ASC. And there was the PXS, like the tiny product fleet, and there's Tops, TOPS. There's a bunch of product fleets that have had really different looking stock charts, and a lot of them are starting to turn up now late in the cycle. And I am really interested in seeing what kind of reaction these fleets are going to get farther down here, because I think they might have more upside to break out because they got to lower lows. And I mean, the crude tankers did like a 2x move from starting from up here, they did 2x. But these ones could do, who knows, a 3x if they're down and then they shoot way up. So these ones are interesting. But again, right now, I think we're in a down move on our credit cycle, and that's going to pull everything down, including the tankers, until we can get to these up spots. So looking for kind of timing targets to go up, because they're just going to go up right when the whole market goes up. That's when gold will go up. That's when tankers go up. And treasuries will be okay in that kind of spot. I was looking at corporate bonds. I'm less excited about those than I was maybe 2 weeks ago because they look super weird now, and all the Fed intervention. But these tankers look good, and this is something I would consider doing a call option on in the middle of a down cycle, which is a bold move. Like with gold, I probably wouldn't do a call option. I'd just hold it. But these tankers should be able to get big enough moves here. And then at the end of this cycle, we should get some really volatile, wild consolidation. And you can day trade the crap out of this. And these tankers should be pretty interesting there too. So we have another month and a half of craziness with these. And then we should get out to the end of the cycle in June sometime. And we had a credit expansion growth phase where this entire crazy cycle ends and we get to more normal conditions, and we should really get a shot out of this down cycle into the up cycle. It's usually a big reversal, and then the tankers will still be really interesting, and I'll be looking at them for sure. But I mean, stocks like GE and Tesla, like energy and big tech like Google and stuff like that will be shooting out of here like really well when you get this reversal. And the tankers should still be good, and a lot of them are like dividend stocks that are going to be something that can hold up over a bear market. So these are really interesting stocks, these oil tankers. And now the product tankers are getting really interesting in the immediate. Although I think it is the crude specific fleets that are going to have more of the crude storage for the long term. And I like the crude only fleets long term, and they've been good since the beginning, but these product fleets may have a more speculative upside in the next month or something like that, or all the way to the end of the cycle, the next 2 months maybe. And it's hard to say what kind of move we'll get out of here with the fleets, because the contango will be lessening at that point, and the market conditions that are bad for energy, that are good for the tankers, will switch, and the actual energy stocks should be doing good. So I think I'll be less excited about the tankers when we get out here. And I think the product tankers in the rest of the cycle are going to be pretty interesting. So that's a look at the tankers and the contango, how the spot price of oil now is lower than it is in a couple of months. That's what the contango is. And that's why the oil contracts went crazy negative, because of the higher futures prices. And also, those higher future prices are why the oil tankers are just holding oil and waiting to unload. And we have an entire world full of oil tankers just sitting full of oil. Now they're going to fill up all the product tankers, and those will just sit there. And then what are they going to do? I don't know. We'll see what happens. This is Brian Lewis with MMT Investing. Please hit the like button. And not an investment advice, just a model, just an idea. Don't recommend anyone else trades based on my model, even though that's what I'm doing. And happy trading.